Thank you, Raymond. Good evening, everyone. And firstly, sincere apologies for the delay. There were some technical issues. Welcome to the Q4 FY19 result conference call of Sintex Plastics Technology Limited. I would like to thank the management for giving us the opportunity to host this call. The management team is today represented by Mr. Amit Patel, MD, Mr. Mahesh Tapadia, Group CFO, Mr. Chetan Joshi, Joint CFO, and other senior management personnel. We'll start the commentary from the management and then move into the Q&A. Thank you, everyone. And over to you, Amit, sir.
Hello, good evening. I would like to thank all of you to take interest and participate in Sintex Plastics Technology yearly Concall. Our sales has been at 4,700 crores for FY19. Our EBITDA has been about 643 crores and net profit of about 94 crores. I would also like to, there was a technical error on uploading our results that delayed this Concall, so obviously sorry for that. Last quarter was a very challenging quarter for us, and last H2 was also quite challenging for Sintex Plastics Technology Limited on account of Indian automotive business slowing down, as well as we have seen industrial investments, especially in Q4, affecting us a lot. The brighter side was our PPC business, where we have been focusing on economically weaker section housing, as well as economically weaker section consumers and rural products, which has done extremely well, even in Q3 as well as Q4. Basically, our international business, which is in Euro, has done very well, despite Eurozone not doing well. We have not seen in reporting here in Indian rupees because of the exchange rate of Euro versus rupee. Rupee has been strengthened against Euro, and that's why we are not seeing the numbers. Otherwise, in Euro currency, our European business has done externally well, providing and seeking the presence of Euro economy as well as European automotive business not doing so well. In PPC business in India, which is consumer business, we have also launched UPVC interiors and FMD products, which has been launched on region by region and showing extremely positive feedback from various customer trial installations as well as commercial installations. We have also earmarked the growth strategy for next year as well as till 2022 on an ultra-low Capex. We have currently working on 2 outsourcing factories. This year we will add another 2 outsourcing factories and would have 9 facilities. Out of that, company will own 5 and 4 will be outsourced. So going forward, as we last year, entire year, our Capex has been ultra low and we will continue to do the same in the future. We have also taken a strategic decision to reduce the debt by selling non-strategic assets for the future. We have earmarked next 2 years where we would continuously reduce our debt and make all our ratios positive, make balance sheet stronger, and continuously invest our energy into Indian business, industrial as well as consumer business. Our focus has been on water tank, factory-made doors as well as UPVC interiors. We have also introduced after-sales service, which enhance our customer experience and customer satisfaction. This has been prime for our consumer business in India. We have also reduced our government exposure on prefabricated building systems continuously, and that is the reason why we are seeing the numbers lower than last year. But for overall growth of the company for next 4 to 5 years future of our company, this was must. We need to focus on a consumer business as well as an industrial business rather than government business. Our Capex for the last whole year has been 170 crores. That takes 44 crores of foreign exchange impact. If that is removed, our total Capex is 130 crores. Out of that, Indian Capex is 62 crores and balance 70 crores has been in European business. Our net debt currently stands at 3,343 crores. I would like to now end my speech and take questions, if any. Thank you.
Sure, thank you very much. We will now begin the question and answer session. Anyone who wishes to ask questions may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets for asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask questions, please press star and 1. The first question is from the line of Sandy Mehta from Evaluate Research. Please go ahead.
Yes, good evening. You had mentioned in your comments that, Capex has been ultra low. Can you please comment on what sort of free cash flow? So if you look at your cash flow from operations minus Capex, what sort of free cash flow per share you experienced in the fiscal year just ended, and what is the outlook for free cash flow generation in this new year that has just started?
Yeah, so free cash flow is around 160 crores, 160.
Okay. And so that was for the year just ended, right?
Right.
And then what is your outlook for free cash flow in this new fiscal year, ending fiscal year 2020?
It is expected to be higher by, say, 10 to 15%.
10 to 15%, okay. And my second question is, about a year and a half ago, the company had embarked on a distributor revamp and upgrading your distributorship, and that had yielded very good results, I think, in the north in UP. Could you just comment on the status of your distributorship right now, and have you taken this program throughout the country, and what sort of results you're seeing? Thanks.
We have earmarked on improving our network penetration. Basically, the markets are shifting, and we are seeing the shift from larger cities to medium and smaller cities and to ultra small cities up to 50,000 people population. So basically, we need to improve the penetration, plus we need to improve quality of our distributors who can service the customer as well as install the products, because all our new products, especially FMD and interiors, are service-oriented products. You cannot sell it as a product in a package and then the customer will get it installed. So it needs a full service. And we have been currently focusing on Western Zone, where we are penetrating, first of all. Second, we are also changing our existing distributors who are present in center of the cities to the peripheries of the city where the market is shifting, as well as we are also tying them up with apps. Today, more than 90% of our dealers and distributors are placing the order as well as recognizing their sales on our app. Plus, we have dealer management software, retailer management software already installed. So, this entire activity is helping us to giving us excellent growth in water tank. This was done to start with water tank, then we have gone to FMD, and then to Sintex interiors. We will also start doing this in southern region as well as in the central India once we are through with western region. The dealer network currently stands at 800 people. Our retailer network currently stands at more than 12,000. But at any given month, we generally get a hit of about 6,000 to 6,500 retailers. So every month, 6,000, 6,500 retailers actively buy our products through our app.
All right. Okay. Thank you so much.
Thank you. The next question is from the line of Saket Kapoor from Kapoor & Company. Please go ahead.
Hello. Hello. Yes, sir. I'm audible, sir?
Yes.
Yes, sir. Firstly, what is the debt on the balance sheet as on 31st March, sir?
3343.
It is the net debt or the gross debt?
Net debt.
And what is the gross debt?
3650.
Sir, and sir, currently, sir, last few days ago, sir, we have also forfeited the warrants issued to the promoters.
Yes.
What is the status, sir? And sir, as on date, sir, today, whichever companies are having large debt are not सर सही मायने में सर उन कंपनियों का जैसे डेथ नेल बच गया है कि अब उनका बचना मुश्किल है वो कंपनियां जिनकी भी डेब्ट इक्विटी रेशियो फार रीचिंग हो गई है, उनका आप सस्टेन करना इस मार्केट में बहुत डिफिकल्ट हो गया क्योंकि लिक्विडिटी की प्रॉब्लम बन गई है। तो आप कैसे देखते हैं सर कि सिंटेक्स प्लास्टिक भी इस ट्रैप में फंसेगी कि कैसे अपने आप को उभार पाएगी? क्योंकि सर इन्वेस्टर्स का पूरा पैसा ही मेल्ट डाउन हो चुका है आज साल भर के अंदर में। सर इस पर क्या आपका कमेंट है?
So we have taken a strategic decision to monetize our non-strategic asset, which we do not want to focus for next 5 years. We expect this monetization to take place before December, and I think by next year we will be substantially small balance sheet with very low debt compared to our business. So this exercise is already going on. We are in an active stage of monetizing our assets which are non-strategic for Sintex Industries going forward.
So could you quantify and label which assets are there? Automotive segment, I think so you have already mentioned to the exchange medium. Other than that, anything else that is on block, sir?
We have a large automotive business. Our automotive business in Europe is close to 285 million euro. In India, we are at about 500 crore rupees. These are top lines. So these two are very large businesses. And basically, our entire idea is to get out of automotive business and concentrate on consumer products as well as industrial products for India.
But sir, with these market conditions, do you think you will get any value that will be able to suffice you from this problem, or it is too late now for us to get our debt restructured or to lay down our debt now?
I think, look, timing-wise, yes, it's challenging. The markets are tough. There is very little liquidity in the market, but we are sure that we will go through these two transactions. We hope that we can monetize this before December. We will try our best, but we are pretty sure to do the transaction.
It's about the forfeiture of warrants, sir. What is your comment on that?
The forfeiture of warrant is the question of liquidity. Today in the market, if you see a promoter needs to bring in money, it's very, very difficult. Today, LAS is also not there. Plus, the market, NBFC market is non-existent. So, question of liquidity had prompted promoters to forfeit, not subscribe to the warrant and forfeit 60 or 70 crores.
So, sir, how will that capital will be, which was promised to the company, how will that reach to the company going forward? I mean, what steps are you taking? Because that liquidity will be needed for the company as planned. And so what is our debt repayments schedule for this year, sir? How much that is to be paid?
We will definitely have to sell our non-core asset to generate liquidity and to get out of debt which looks high. Plus, this year repayment is how much? Please hold.
Total repayment is in the range of around 450 crores. 350 crores is due overseas and 100 crores is due for our Indian operations.
Sir, how will we be able to repay that given the condition of the operations and working today?
Overseas is going to get paid by selling of the assets, which we have said non-strategic asset we are selling. So that should not be the issue. We will be selling the asset and paying that debt. And Indian debt is only 100 crores, which will go from our cash flows.
Hello? Hello?
Yes.
I didn't get you.
Hello?
I replied to the question.
Sir, last time I did not get you. Sir.
The international debt will be funded, will be reduced by selling of the international asset, and yes, local debt will be funded by the cash flow, which is 100 crores.
So, sir, international operations, we are going to garner only 400 crores. No, last point, sir, concluding. From international asset sale, the size will be only to the tune of 500 crore or greater than that, sir? How are you evaluating?
It will be much, much larger. I cannot share the numbers, but it will be a very large number which we will generate from sales of our international assets.
And you are the interested parties there in the international market who are eager to buy your asset now?
We are running a process. We have more than 8 bids on our hand currently.
Thank you. Before we take the next question, we'd like to inform participants that in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 2 per participant. Should you have follow-up questions, we request you to rejoin the queue. The next question is from the line of Chetan Tubalkar from Evaluate Research. Please go ahead.
Good evening. My question is basically about the outlook on the custom molding business, especially after you will be hiving off the auto business. So what kind of outlook do you see on the custom molding business when the business from auto will be reduced? So how do you see it going in the future?
We are very strong in custom molding business. Just last year, because of industrial slowdown and not new Capex happening into industries, we did not had a good year last year for custom molding business. But other than that, most of the products what we make in custom molding business is either there are 1 or 2 players. So hardly any competition. Our base of products or range of product is very wide. We supply sewage treatment plant, underground fuel tanks. We also do a lot of custom molding products which are used in various assembly lines. We also do a lot of products for panel tanks. So the range of our custom molding products are huge. And virtually, as I say, we have either 1 or 2 players to compete us in this line of products. So going forward, the moment industrial investment starts happening, we will see a really strong upstream coming from PPI, how we call it internally, is a custom molding products.
Okay. And secondly, about the gross margins, in the wake of Brent crude, actually oil prices crossing around $70. So what kind of gross margins do you see going ahead?
See, the petroleum, the crude price does not affect petrochemicals. Petrochemicals have their own way of behaving. It's mostly demand and supply or large plants shutting down internationally. So basically, crude is not the barometer to see the HDPE, LLDPE prices. These are completely done independently on demand and supply. Currently, the prices stand around 100 rupees, but if it goes up or goes down, in PPI it is easy to pass on. In PPC, there is a lag of 2 months to pass on.
Okay, thank you.
Thank you. The next question is from the line of Tavishesh from Tyron Capital.
Hi, sir. Your pledging is quite high. Any guidance as to how you would be reducing the pledge? Second thing is, you have completely stopped conference calls for Sintex Industries. Now, I mean, the shareholders of that company do not have any platform to raise questions. So, am I allowed to raise questions out here for that?
First of all, this is Sintex Plastic Technology conference call, so we would address SIL later when we have a conference call. It is not that we have chopped it out. It is in our mind and we'll come back to you. As far as pledge is concerned, yes, pledge is high, but underlying borrowing is quite low. So I don't expect any fresh borrowing to do from the pledge. So we are quite comfortable. We are loan against share currently stands less than 100 crores.
Okay, and I mean in percentage terms, what it would be less than 50% of the original loan?
Even more than that, even more less than that.
Then, I mean, why there is no release of pledge then is it because of the drop in the share price?
Exactly.
Okay. And on the Sintex Industries, any, idea when you will be holding the next conference call? Because even after 6 months now, there has been no conference call. And there has been a lot of queries because of the loss that has been there now in the last results.
We'll come back to you on SIL soonest.
Okay. Thank you.
Thank you.
Thank you. The next question is from the line of Tiger Kapoor from Kapoor and Company. Please go ahead.
Hello.
Yes.
I'm sorry to interrupt, but we can't hear you, Mr. Kapoor. Could you please or use the handset?
Hello. Yes, sir. The debt figure is 3346. Hello.
We still can't hear you. Could you please use the handset if you...
Sir, the debt figure is 3346.
Mr. Tiger
The
Kapoor,
net debt figure. Hello. The net debt figure, sir?
3,343.
43. Sir, this time, for this quarter, the finance cost is 95 crore. Is it a provision only, or we have made a payment?
The finance cost is high because of increase in percentage of interest. So our cost of borrowing has gone up.
No, sir. I was talking in terms of, is it provision only or the actual cash outflow of 95 crore? Are we making provisions for finance cost, or are we making actual payment?
No, we make actual payment and provision, both.
Sir, what is the outstanding liability and the other financial liability?
See, we have certain debentures where the cash flow is post-dated. So we will, but we provide in our P&L.
I didn't get you. Come again.
We had replaced 1,180 crore of debt of the Indian banks by placing with KKR and other investors. Their certain portion of those debentures has smaller coupon and backhand coupon. The backhand coupon is currently provided. The current coupon is paid in cash.
But, and we have other financial liabilities of 900 crore. So, what is this about?
That is working capital and secured and unsecured lenders.
And other financial liabilities?
That is mostly working capital.
110 crore.
No, balance.
Sir, no, sir. I'm talking about the three figures. 915, 111 and 186. The last three items. Under the current liability section.
For standalone or consolidated?
This one is for consolidated, sir.
I don't understand where you get these numbers from because we don't have this here.
Sir, under the current liability, we have three figures. The other current liability, provisions and current asset liability. I am talking about the 915 crore figure.
Yes, the provisions are the provisions which I am talking about, and then the 915 would be other unsecured creditors. Lenders, sorry.
So just like IBC is relevant in our country, what is relevant for the European nations if we fail on our obligation?
So 915 are the classification of the loans which are due within 1 year.
Current maturity.
Current maturity. Sir, I was talking about just like IBC is relevant in our country, what happens if we are unable to repay our due in Europe?
No, nothing. That we don't have loan against our European asset. The loan is sitting in the holding company, and holding company loan will get paid by selling off the assets underlined.
Sir, can the investor be assured that the company is still going to stand on its feet after facing this downtrend?
Yes, we all are definitely trying to monetize the assets. If both this monetization happens, company will come out very, very strongly.
And if that doesn't, sir?
It will happen. We have excellent interest in both the assets, and it should happen before December.
Thank you. Before we move to the next question, a reminder to our participants, please limit your questions to 2 per participant. The next question is from the line of Anishek Shah from AZ Wealth. Please go ahead.
Unmute karo. Hello? Unmute.
Yes, Mr. Shah, please go ahead. Mr. Anishek Shah from AZ Wealth, please go ahead with the question. There seems to be no response from the line of Mr. Anishek Shah. We'll move to the next question. The next question is from the line of Tanmay Shah from Star Investment. Please go ahead.
Hello.
Yes.
Yeah, sir, could you explain the modified qualified opinion for the debt?
Actually, we have certain debt from KKR, and under the KKR debt, some of the financial covenants have been breached. So, because of the breach, we have to provide a declaration as required by SEBI LODR rules.
Certain covenants have been breached.
Yes.
So what is the likely impact?
No, actually, majority lenders have already accepted the breach and have given us a waiver also. So only for residual minor lenders only, we are still awaiting their approval, which we are quite sure of getting it.
Okay, thank you.
Thank you. The next question is from the line of Anishek Shah from AZ Wealth. Please go ahead.
Sir, 2 questions. First question is, what is the EBITDA of the company with the non-core business you are planning to sell? I'm talking about the international auto business also and the domestic auto business also. And what will be the residual EBITDA will be there? Second question, sir, you are talking about selling non-core assets in February, then you will come out with in March, May also. We are on one of the Indian auto companies looking to buy out the asset. When is the real transaction is likely to happen? Because I don't see anything happening right now. You are saying now, you are talking about it will be done by December. For God forbid, for anything doesn't happen till December, you will come out with something else also. So I don't understand why there's been a delay. If you want a liquidity kind of thing and give a boost to shareholders, and if you're concerned about shareholders, do the transaction as soon as possible.
The M&A transaction normally takes 18 to 24 months. It's not easy to sell a business asset overnight in India or in Europe. There is a process which we have to run. So we had appointed Natexis in Europe to run the process for a European asset. They do vendor due diligence, which takes about 3 months. Then you ask for the bids. You invite them for data room access, which takes another 2 months. You get non-binding offers. You select 4 or 5 top of those offers. Take them to the plant visit, management meetings, management introduction, and allow them to do their own due diligence. Once that process is over, then legal due diligence as well as their own committees. We give them staple finance if they need, and then start drafting SPA agreement and close. So the whole process takes normally 18 months. We are trying to expedite this in 12 months. So we are trying our best to do as soon as possible. We understand the urgency and we are on top of it. We monitor it on daily basis.
Sir, my initial question was, what was the EBITDA of the company in the auto business which you are planning to exit, the domestic and international operations?
As far as current exchange rate is concerned, about 260 crores of EBITDA and local will be 40 crores. So to about, I would say, in the current exchange rate, 290 to 310 will be the total EBITDA.
Of the business which you are planning to exit, sir?
Yes.
Okay, and what will be on the domestic side when you see right now, how the international business doing right now? How the infrastructure business doing right now, and what will the management how the management foresee next 2 years for the residual business? What is the plan of action they are taking?
I have already said in earlier question that we are extremely bullish on our consumer business. We are also very bullish on industrial and custom molding business when the industrial cycle turnarounds. Currently, even in last year, the whole year, all 4 quarters, our consumer business has grown quarter on quarter sequentially as well as compared to last year. So we have seen excellent growth, especially coming from rural India and deep penetrating into smaller cities, targeting customers, economically weaker section. So this has really paid off. So we are on a verge of seeing excellent growth on PPC business current year as well as industrial business once industrial cycles turn around.
So last question, any plan to get, why not management put, like obviously the warrant was a much higher price right now, at the current price also maybe has taken some premium, and why not the management infuse some money in the company so that will gain the shareholder confidence?
Again, I said the same thing. I would have subscribed at the higher price also if the liquidity was available in the market. Today, you and I both know that getting a liquidity is extremely difficult, looking at neither the banks, the foreign banks, nor the NBFCs lend. So, obviously, if the liquidity eases out, this is the first thing any management would do.
Why not the management sell some of their personal, like whatever their real estate and other things they are doing, and is it any possibilities there?
This is how you reduce your LAS. So we have reduced our LAS to the extent which is ultra manageable by doing the same.
Okay. Thank you, sir.
Thank you. Thank you. Before we take the next question, a reminder to participants that you may press star and 1 to join the question queue. The next question is from the line of S. Kapoor from Kapoor & Company. Please go ahead. S. Kapoor from Kapoor & Company, you may go ahead with the question.
So, can you hear me, sir? Hello? Can you hear me? Hello? Hello? Audible, sir? Hello? Yes, sir. Sir, I was talking about the loan against...
We can hear you. Please go ahead.
Yes, sir. For the loan against shares, how much is the...
Mr. Kapoor, we can't hear you.
I'm talking about the loan against share how much amount has been withdrawn?
Already replied this question. I replied this twice.
So I'm on a very weak line. Can you answer 1 second? How much is the loan?
Hello?
Yes, sir. बोलो बोलते रहो ना बोलो
लोन अगेंस्ट
किससे बात करो
I can't hear you. Then there is a
I can hear you. बोलते रहो तुम.
I will move to the next question. The next question is from the line of Roshan Raghavan from iThought Advisory. Please go ahead.
Yeah, good evening. My question is on the line of your cash and cash equivalents. So, if I see last year you had around 472 crores and now it's 163 crores. And you also say that you've reduced debt by around 500 crores. So,
no, I didn't say that we reduced the debt by 500 crores.
So may I know why the cash equivalents have gone down?
See, our debt as of date, net debt as of date is 3343.
Yes.
Okay. And our cash on the book, as far as consolidated statement is concerned, is 163.
Yes. No, so your cash last year was around 472 crores, if I'm right. Is that right?
Yes, cash and cash equivalent, yes.
And now it's 163 crores, am I right? Hello?
So there is a Capex of...
Hello?
Hello. Yeah, so there is a minor dip in the cash available. This is on account of Capex we have undertaken both in India and overseas as a part of our Capex program.
Okay, so this dip in cash is due to the thing you say, Capex.
Right.
Yes. Yes, okay, that was my question. Thank you.
Thank you. The next question is from the line of Piyush Karasya from Crest Wealth. Please go ahead. Piyush Karasya from Crest Wealth, you may go ahead with your question.
Hello. Are you able to hear me?
Yes, please go ahead.
Yeah, what I was asking is, in an initial comment, I heard that there are like 2 outsourced factory currently we are working on. I just wanted to know what is this outsourced factory is going to help with?
See, we manufacture water tanks, which is purely air transporting from one place to another place. So, having more facility at different parts of India reduces our logistic cost. Logistics cost is the second most important cost after raw material. So, to reduce the logistic cost, we need multiple locations to set up the factory. Our markets are shifting. Our markets are shifting from large cities to smaller cities and rural India. So, basically, we need to increase our reach by appointing distributors as well as manufacturing at remote locations. Now, if we invest money in every factory, it's a dead investment because we need lot of land for storage of water tanks. The factories, buildings are not that big, but we need a large amount of land. So rather than buying the land and keeping in our books and making a factory and the machine, it's better that we outsource our own product. We give them mold, get the tanks manufactured by them and take it under our quality control and then distribute to our dealers. That is the outsource model which we are adopting, which we call low Capex growth model.
Okay, so it will be like contract outsourcing sort of a thing.
Not exactly contract. They will only make it for us.
Okay, so they'll be just making it and we'll be selling it on the name of our particular company. So it's kind of, they'll just produce and we'll sell it across on the brand name of Sintex.
Exactly. So our target is to do four such plants. Currently we have 2.
Currently we have 2 and these 2 plants are where?
Maharashtra and Assam.
Okay. One is Maharashtra, one is Assam, and other 2 would be?
One would be in UP and one would be in South.
Okay, so we are covering 4 of the destinations.
Plus we have 5 of our own location. Right.
Okay. Okay. Thank you.
Thank you. The next question is from the line of Soumil Shah, who's an individual investor. Please go ahead.
Yeah, hi sir. I wanted to know how much Capex have we done current year?
173 crores. That includes foreign exchange Capex, so change in foreign exchange also. Net, if we remove foreign exchange component from there, we have done 130 crores.
Okay, so I wanted to ask you, the previous participant asked you about the cash and cash equivalent. So you said from 472 it has come down to 163 for Capex.
Not only Capex, it's a working capital cycle. So basically receivables, debtors, everything counts in that. So your working capital gets stretched, your stock gets increased, your distribution have more stock, so it changes. It's not only Capex. Capex is a major part of it.
Okay. And so previous concalls, if I'm not wrong, we were targeting an EPS of around 3.5 for current year. And for next year, we were targeting of around 6. But now we are nowhere near that. Yeah. So now what's your outlook for next year?
See, EPS, definitely we are not on the target. We did revise EPS throughout the year. mostly because of our industrial products, locally as well as auto industry. Auto slowing down was a huge surprise from November. No one predicted that. We had seen a growth, we have calculated a growth and it became negative. Industrial was again a big surprise. We thought that industrial growth will take place, turn around, but it did not. And obviously higher cost of interest is a major reason why new investment in greenfield industrial projects not happening. These two let down our original estimates. But our consumer business did as per target almost, and current year also we are projecting that consumer business should do a good growth, 25% plus, while we see that our prefab business as well as industrial business will wait for industry investments to turn around.
Okay, but can you give me a ballpark number? What are we targeting for next year?
We will definitely target for higher EPS than what we have achieved last year, last year now, yes. But it's very difficult for me to give a target for next year EPS because I don't want to be wrong like I was last year. So I would wait for industrial investments to turn around to come out with the concrete number. But overall, I can say it will be much higher than what we have achieved last year.
Okay. And for this current 2 months, how is the business shaping like?
Again, consumer business is doing extremely well. We are really penetrating. Our dealer network is expanding. Our focus on economically weaker section as a target consumer is also working out well. So all that thing is as per planned. As far as custom molding and industrial business is concerned, we are working out, we are penetrating there also, but obviously the investment current levels are low and automotive turnaround is awaited. So we'll wait for these two to happen and come out even positive numbers in these two sectors also.
Thank you. The next question is from the line of Mahesh Gaitande, who's an individual investor. Please go ahead.
A couple of questions actually. I'll ask them sequentially. See, all this while the last quarter you were pretty bullish on the automobile, the automotive sector per se, and all of a sudden you change the gear to take a decision to sell it off. So what went so wrong that you had to sell it off? Number one. So if you could answer me this, so I will ask the second question.
See, it was not all of a sudden. If you recall my last con call also that I specifically said that we had hired a large consultancy company, world-renowned, to give us a strategy map for next 5 years. And their finding was to reduce the debt. To reduce the debt, they said that we have to identify the focus area. So when you identify a focus area, which was a consumer and industrial, others become non-strategic. So it's not me who has reduced the sales of automotive in India. It's the market which is pulling down the automotive sales. But that is not the reason why we are selling the asset. I personally think that automotive is an excellent business going forward after a year. India, for next 10 years, automotive is a great business. But not strategic for me.
Okay. Okay. And what are the EBITDA and revenue contribution for FY19 from these automotive business of yours? EBITDA and revenue contribution?
290 crores to 310 crores will be the EBITDA contribution of non-strategic business in FY19.
You're talking as a whole, meaning your NIF as well as Indian automotive, or how is it? Or standalone?
Both businesses put together.
Okay. So something, something which is up for sale. You are saying that 290 to 310 was the contribution for FY19, right? EBITDA contribution.
Yes.
And what is this revenue contribution from these two sectors?
Wait, I'll let you know.
It is around 2,700 crores.
2,700 crores. So this is for FY19 you're talking about, right?
Right.
So for FY19, if I remove this particular two segments, so you are still made a business of 2,000 crores, right? 4,700 crores you talked about for FY19 as a whole, your total top line is. So if I deduct these 2,700 crores, so you are still left with 2,000 crores, correct?
Yes.
And what is the EBITDA margin on this, the rest of the business? for FY19?
You can calculate the same.
Okay. So total EBITDA was 640 crores, right?
Yes.
So on to residual 2,000 crores, you are saying that the EBITDA would be about 300 crores, correct?
Yeah, or more. Yes.
640 minus 290, 350 crores.
Yes.
Okay, and how do you see this particular business panning up? Meaning, last phone call you said that you are going to come up with AOP and you will give a complete roadmap for next year as well as FY20. So any guidance on this revenue targets for FY21, 20 and 21?
Basically, we are looking at a 5-year. 1 year has gone. So we have next 4 years to work on these 2,000 crores. We think that this 2,000 crore will become 5,000 crores in next 4 years. We are looking at a very healthy growth coming from PPC business, and we are also looking at an excellent opportunity for industrial business when it turns around. As I said, in industrial business, we have hardly any competition. In each segment line, we have 1 or 2 competition, and it should pan out well. Currently, yes, this sector is not doing well, but obviously it will change, and everyone needs the employment. Industry is one of the manufacturing industry is one of the place where you convert your rural employment into blue collar, and this is exactly what government's agenda is. So I think within 6 to 1 year, industrial growth will come back. Hello.
Thank you. The next question is from the line of Jay Balaji from Jay Balaji Securities. Please go ahead.
Sir, hello.
Yes.
Yes, sir, I missed the last part of it. About the loan against share part, sir, can you repeat? You were telling about the speaker earlier. How much is the loan taken on against the shares for both the companies, Sintex as well as Sintex Plastics?
I don't have the exact number, but it's less than 100 crores.
Total figure for both groups?
Yes, both.
Both companies together is less than 100 crores. And we have pledged are far greater than that. That is what.
Yes, because we want security.
Right, sir. Sir, and you are pretty confident, I'm repeating your statement, but you are pretty confident that we would be able to get out of this sulky feeling for the company, because this was once earlier also the company was trapped in the debt due to, I think, to the ECB part, which played out 3-4 years earlier. So do you seem very confident that this time also we would be able, and we will not be a future candidate for IBC, or the shareholders will again get an opportunity to redeem the investment here?
Definitely we are working towards that. We have taken all corrective actions, and I think that the way the process is going on, it should happen within December or this year, this financial year, and once those 2 transactions happen, then yes, there should not be any issue.
Hello.
Yes.
Yeah. Yes, sir.
Thank you very much. We'll take that as the last question. I would now like to hand the conference back to the management team for closing comments.
Thank you everyone for participating for Sintex Plastics Technology annual investor concall. We wish all of you success, and we are working to improve our numbers as well as reduce our debt, and our work will keep on happening, and we are on top of it. So I rest assured that we are continuously monitoring the position and give timely feedback. Thank you.
Thank you very much.